The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. As always, we have the anointed, the sacred, the important time of the day.
The following takes place between 2 p.m. and 3 p.m.
So what do we have? Well, as we talked, especially with Tim Ward last Thursday, I was really thinking that we had a pretty good opportunity to have what Richard Wyckoff called a buying climax, and that's just kind of out of nowhere. Everybody gets long, all the shorts get run, and then you don't have that much. But we continue to see a lot of signals in the market. I didn't have a lot of time because I was trying to fix some stuff this morning in my data, so my newsletter was a little curt or short if you live in Lutz. But one of the things was the put-call ratio that I didn't really have a lot of talk about. Yesterday we went down a bit, but the more that people lay off thinking that the market can go lower, generally I wouldn't say the odds go up, but the odds go up that it's going to be much larger when the shorts exit the market. They're not there, and I tend to look at it in the VIX put-call ratio and have it in the newsletter every day. But one of the easiest ways, that's one way of taking a look at it, when a market's going to be weak. If you've been selling off for 2 years and you finally make a low, I'm not going to be surprised to see some low put-call ratios. You still have a bunch of folks that are going to say that the end is nigh, we're going to zero. I remember being at 660 on the S&P, like that 667 or something, and having a multitude of hacks in the market. I think the biggest one was Joe Battipaglia. And the guy had been wrong for 2.5 straight years saying to go long. And literally the day that we're down and the low comes in, he says it's time to go short. We're going to zero. Well, those people are maybe be the most valuable people on Wall Street, and that is those folks that just can't be wrong, but they're just always wrong. But generally, when short sellers become nervous about being short and actually quit shorting, they can still short if they're nervous, but generally after they've been kicked around a bit, they'll give up of throwing money away at the market. We've talked many times about how the market's going down only about 25% of the time. Even in bear markets, it just goes down a great deal more in bear markets than it goes up. You still get a lot of days up. But the question is, do you have the kind of effort in the market that has led to higher prices in the past? That's why I kind of brought up the IBB and their thought that you should at least have a continuation day within 5 days. But I think that's more of a thing with equities. I think with indexes and the broad market, I think you really have to have a up day to rival the first huge thrust higher within about 3 days. And that's pretty much what I use. Thinking that if they've caught a bunch of shorts napping, that they'll squeeze them out. And if these folks are skiing well over the tips of their skis, they're going to get a margin call. As soon as those guys are out, the market generally goes back to where it probably should be going, based on kind of more of a fair value estimate of the stocks at the moment. It doesn't mean it's truly a fair value, but at least what people think at the time. Anyway, there's one part of it, but I was really looking forward to shorting yesterday and today. Friday, we still had kind of a high VIX. It started to turn. Even better, though, was that no one wanted to start thinking that there's going to be a lot more downside. The VIX gives me a better clue because it is just the out of the money puts and calls. It's not the in the money like the equity PCs. They tend to be less prophetic on whether or not there's short sellers underneath it. But a low VIX is one reason. Now all these are listed in my newsletter every day. One of the other ones out here, of course, was the advanced decline line. And another thing I like to look at a lot, especially lately, has been the advanced decline line on the Amex. And the reason for that is this thing has been fairly good on finding highs and lows when it gets very low. And it can actually go both ways, but it does mean generally you're going to have some fairly large moves. Yesterday's 0.55 reading on it pretty much told us that we were within 12 or 24 hours of probably a continuation of the move, that people really were all on one side of the market in the way the Amex was. We'll probably see something like a 0.1 or 0.2, I would imagine, today or tomorrow, and that may actually set up enough shorts to actually make some kind of low. And that would also come along with what tomorrow is, which is Delta Neutral Day for the monthly options expiration. If you're new to the show or haven't been listening for a while, Delta Neutral Day is when the monthly options are hedged out. There were a lot of folks that had bought workstations back in the 1990s and actually started trying to put a lot of math behind the way that they sold puts and calls. Of course, we had a Nobel Prize winner on Black and Scholes. Both of those guys walked away some big bucks for coming up with a model on the way you should actually price options. I think both of those guys ended up running a giant company bankrupt, though. And that was Long-Term Capital Management in November of 1998 when I started actually trading full time. So, you can be smart. I always love that saying from Neil deGrasse Tyson. You can be smart enough to think that you're right, but you can be not smart enough to know when you're wrong. You can know a lot to think you're right, but maybe not enough to know when you're wrong. Anyway, just a few things out there that had me thinking fairly bearish over the last few days. And, of course, the lack of any continuation in the market. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As we come back, got a couple of questions. Could we, well, let me get a current quote here on the market, on the S&Ps. Well, what could we have? I think there's, and I don't know when we get it, maybe it'll be through tomorrow, but I think before we find any real bottom, we're probably talking about 38.50. Now, could you get a little bit of a bounce tomorrow on delta neutral, or just the plunge all the way down to that mid 3,800 range? I think you could, but at the moment, that's it. Now, one of the things I wanted to bring up that I didn't see anybody really talking about other than Bloomberg in the middle of the night was a article about the BIS, which is the Bank for International Settlements. And they came out with a warning, which is maybe why people are starting to get a little worried yet, too, yesterday. And that's pension funds and other non-bank financial firms have more than $80 trillion of hidden off-balance sheet dollar debt and FX swaps. The Bank for International Settlements. And that's kind of the bank that's behind the all the central banks of the different countries. The FX swap markets were, for example, a Dutch pension fund or Japanese insurer borrows dollars and lends euros or yen before later repaying them, have a history of problems. And, of course, both non-U.S. banks and non-U.S. non-banks, such as pension funds, dollar obligations from FX swaps, are now double on their balance sheet debt, it estimated, from just April of this year. Thanks, Jimmy. Yeah, I was watching this. They had a bunch of people. I just happened to be up about 2 o'clock in the morning because I'm an old man now, and old men do that kind of thing. We never sleep through the night. We're just like babies. But anyway, you've got a few people. Anyway, the discussions were fairly interesting, mostly because it sounded like everybody knew this is a problem. They weren't very surprised. But 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 they weren but it's kind of like a horse designed by committee. They all saw the problem very differently. Some people were the Pollyannas and saw no problems. Some people only saw the end of the world and Armageddon. Some people were kind of in the middle, but even those folks couldn't agree on a variety of different problems with this FX market. The one thing that we do know, and history does tell us, is that every time you get these dark, swampy kind of derivatives markets, they'll eventually blow up, especially the harder they are to understand. But I think the reason the BIS came out yesterday, I think it was after the market closed. It's the first time I saw anything about this. One of the gentlemen in the den said that he posted the article last night about midnight. But they are trying to get the U.S. Fed to actually do something about it and have a little bit, at least more transparency or clarity about how big these FX swap markets are. First thing, when I heard about this and they started talking about it, it sounded more and more like the swaps they had around the housing market in 2007 and 8, and how everybody just kind of writes it off until it actually blows up in their face. But is that part of what we have going on here? I think it was, at least for the BIS, a shot across the bow for the Fed over the next week, saying, hey, you guys are causing a lot of problems. We've got a lot of dollar risk here, and we've got a dollar market that used to be something that you could, it was like watching paint dry or grass grow. And now we have a dollar market that looks like an EKG on a daily basis. Right now, the dollar index is at 105.50. And of course, we were up to almost 115. And, it's hard to understand how we're going to have any kind of clarity and an end to the whatever it is, the depression, recession, pullback that we're having in the U.S. markets until I think there's a little bit more clarity on some of these issues. But don't be surprised to see one of these things, if not in the headlines on a daily basis. Do we have a caller? I'm hearing something in the background. Transparency? I'm shocked. There's gambling in Casablanca, right? Could be. Okay. Let's see here. Okay. No, I figured out what it is. It's Poochie chasing around a bowl of lasagna and trying to get every little bit out of it. And he's under one of these tables chasing it around. And I just never could really figure it out. But he'll spend an hour on that, on getting whatever tiny little scrap of taste is out of it. I'll try to get it during the break. Anyway, we're off 69. Is that right? Let me update that just to make sure. We're off 70 points on the S&P cash. Now the question is, do we have any volume on this downturn? And is there anything out here that tells us that this is going to just be a couple of day thing? Well, volume's okay. We're about at the bottom of the hour with 6.9 billion shares. So is this a blowout? No. But my guess is that everybody is going to be fairly nervous until the Fed comes out a week from tomorrow. So we've got a long time to wait. We've got more than enough folks out there telling everybody that will actually listen that the Fed is not going to get all weak and wobbly at the knees and start having the vapors. Man, it's been a long time since I've heard anybody say that. Yeah, I've got the vapors. Of course, I think that was because all the women had dresses that were so tight that they were about ready to die anyway. Any little heat was enough to kill them off. But anyway, getting the vapors. And I think everybody just continues to whistle past the graveyard and think that if there's any legacy for Jay Powell, it's probably being a lot more like Volcker and a whole lot less of the weasels of the last 20 years. So, you can give me a call. Tell me I'm all wet. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And I have to say, I may be a little jaded myself, but how did it come and go, and not even a peep, that we've gone back to the moon? We've sent a capsule that could actually hold 3 folks and hold them for 21 days. It's gone to the moon. It's now on its way back. It'll hit in the ocean on the 10th. But not a peep. This is about the most ignored thing in the world. And I don't see anybody else around the world sending anybody, even just a capsule capable of holding a few people back to the moon. I know that before they walk on the moon again, we've got some other stuff going on. But, hey, USA, USA, USA. Just thought I'd throw that in there. Everything is not horrible. Some things are good. Yeah, you and the other 10 people that are watching NASA TV, and I'm one of them. China just landed astronauts on the moon? No, they just went up. Something we did 50 years ago. Smokey and the Bandit. They've got their own little international space station. But, They also, China, the other thing that was interesting in China that came out from the Defense Department was that China in the last year has doubled the amount of nuclear weapons that they had. Oh, I thought that was interesting, too. 877-927-6648. Just take a look at some of the charts out here today. Like I said, just, if you bumped into somebody that said they'd been on the International Space Station for 6 months, would you even blink anymore? I don't think anybody under 30 years old would even think that it's more than, hey, I got a new blender yesterday. I think everybody's way too jaded. You can't impress anybody unless there's some stupid rapper. And then everybody gets all weak in the knees for that. But, I don't. 877-927-6648. Email me at pat@tfnn.com. And, of course, you can always put a message in the den. Okay. Okay, I'm just going through some emails here, so we'll get a chance to take a look at it. Question of the day, of course, is always Apple. I didn't like the way that it was not able to make back up to the previous highs. And we've talked a bit about how Foxconn and they've actually been able to move about half their production already to India. But that's still limited by how much actual, not so much production of parts, but assembly of the parts has been moved to India and others in Vietnam, and a lot of others been discussed. Of course, they actually did talk a bit about moving the parts manufacturing to a variety of different countries. I just never really understood the whole idea of throwing everything at the Chinese, knowing what kind of people that the Chinese Communist Party is, and throwing your in. I've always said that China was where U.S. money went to die, as more and more people continue to always chase that part of the market. Anyway, you don't have a lot of volume out here. I don't think it's the end of the world for Apple, so I'm not making that. I do think that there's a gap here at about 139, and that gap actually does set up a fairly nice low if you could get it at about 139. Again, we've got, 5 trading days really to the Fed, and then we go to options expiration. So my guess is that you're going to see premiums and options hold up fairly well into the Fed announcement. Then you're going to have a big dip on the 15th when those the puts or calls, whichever the wrong side is, dissolve into nothingness. And then we're probably going to have a big Friday. That's probably going to be the last big day of the year, being the 16th. Now, could we get into a bigger death spiral for the end of the year if the Fed is incredibly bearish? I think we can, but probably the odds are not very high. Okay. Okay. Meltage happens. Yes, they're incredibly talented. Oh yes, they're the highest artists. I'm sure in 500 years, Picasso and some other unknown rapper will be right up there with the greats. Pink Floyd and some rapper. Don't think so. 877-927-6648. Okay, so we looked at Apple real quick. Down, not a lot of volume. Again, tomorrow is Delta neutral. We could find at least a temporary low into that. So I don't think that there's a lot of reasons to get too excited before about 2 o'clock tomorrow. That is generally when you see the turning point for options market makers at getting set up. Options did get a little bit more bullish, although they're still fairly bearish. But we could still see another 70 points lower in the S&P cash before we get to that kind of low. 877-927-6648. Okay. Let's go ahead and start looking at some other charts. Normally rattle off the phone number a few times while I'm reading other stuff, just so there's no dead air. Okay, so you're thinking I'm starting to get Alzheimer's. Okay. Microsoft's down a little bit. And again, volume's been coming in very strong late in the day. So even though we don't have very strong volume so far, I think it's much more important to wait the last 10, 15 minutes and see if it comes in. It's been, like as I said, kind of late in the day. A lot of that is because we've got such high percentages of dark pool numbers, which suggest that it's not the retail trader doing a lot of trading now and having a lot of faith in the market and going long or short, but it is a lot of people on the street going a mano on each other. I think that's a little Latin, isn't it? Or is that Spanish? I do not know. Anyway, Microsoft's down. I think a lot of these could come before the end of the year, come back into what support would be. Probably around 230, maybe a little, maybe 228 on Microsoft. You did get to a previous high. You do have higher volume on this. This is one of the better looking ones out there. So maybe it gets a little bit of love starting on January 2nd. But we're already starting to see some of these things start to unravel. Okay, let me update a few of these. Okay. Question about Micron. We'll look at that real quick. Oh, going to the break. We're back. We'll look at Micron. It looks like it's trying to find its way back down to the lows. Certainly, just a few days ago, you had 31 million shares on November 30th. Today, not too bad, about 10 million. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And got a few more emails. I think I already said that I could see mid 3800s on the S&P before we get any kind of low. Of course, tomorrow's Delta neutral. They tend to swing the market pretty heavy both ways to add and subtract hedges and puts and calls to try to limit the amount of exposure they have in the last 7 days of the monthly options. A lot of those options have been out on average for 45 to 60 days. So you end up, you end up with a lot of money, about 8 times generally what you'll have in any kind of single week. So it is a bigger event. Certainly, for the work I do, it's all about having enough people betting on one side or the other to get an idea of the wisdom of crowds. But that's kind of it. Let's see what else here. We got a few more emails. SMHs, well, you've kind of come back down. You're at the support line. Don't have a lot of volume so far today yet. But that was kind of like yesterday. We had a lot in the last 30 minutes. Today, about 2.1 billion shares compared to 3.5. So, yeah, you could get into yesterday's and maybe even the day before. The big up day, of course, was the 30th, and that was more than anything the markup for fund buying. So I'm kind of discounting that as anything other than that buying climax where everybody decided they had to get long, only to find out that we're right back down where we opened on that day. Okay. I would say this. There was a comment in the den from John in Philadelphia, and thanks for the compliment. But what I would say is that there are some organic things happening in the market. And while some things happen, the organic ones are the ones that you can kind of hang your hat on. They've got to happen every month. There's fund buying. There's options expiration. There's Fed days. There's a lot of things where you already know that there's going to be either a lot of volatility, maybe not know that which direction the market's going to go, depending on what the Fed says. As a rule, I know where a lot of people are going to do when they get into a gang or a mob. It's a lot easier to predict what happens there. You get a single person, much tougher to figure out what Jay Powell is going to say, or the way that a handful of idiots on Wall Street are going to say what he said, which is probably not true. They may just be doing it to get out and run the stock market as they did on Wednesday last week. And that is that they'll use really as much or what they can to get out and suck in the suckers. I think we talked a little bit about that, which Jesse Livermore saying that a lot of these guys on Wall Street and the politicians around them tend to be Class A suckers, and pretty easy to convince just about anything, of anything. Anyway, we're right back down to the lows, so we've given that up. That now offers where the next support level comes. That'd be about 205 on the SMHs. The planted story. Okay. Take a quick look at CX. Yeah, I got a couple of... Okay. Thanks, John. Okay. C-Mix. To get back to that. Okay, you have one of the bearish patterns that I talk a great deal about in CMEX, and that is if you continue above a 3x3 displaced moving average or a 9-day, although I like the 3-day a little bit better. On this one, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Let's call it 20 days. You get a couple of days underneath it. You get a couple of days above it. And really when you start going below it again is when you start getting the destruction in it. Generally, when this pattern does come together, I would think that you'd want a little bit more volume for confirmation, but it's not bad. Generally, it goes right back to where it started. That would be about $3.40. So, the big thing, and let's look at the TLT real quick. That took a nosedive yesterday. I think a lot of people were just in la-la land, thinking that rates would continue to be fairly low. We did have that gap down. Now today, right back up. So I don't think that they're any less insane today. But it doesn't seem to me like anything that I'd want to bet on that interest rates are going to be going lower anytime soon. But certainly, a lot of people are afraid of missing out. And I think that there's going to be at least one more push back lower. And that's probably going to be at least around the 95 level where this gap actually came. So maybe 96 on the TLT. And maybe we get that retest down there. Maybe that sets some kind of lower interest rates. But I think a lot of people way over the tips of their skis on thinking interest rates are going to turn around and that you're going to go boo and scare Powell out of what he thinks is his legacy, which is going to be the next Volcker. Okay, Path at TFNN.com for that. Okay. Okay. That. Okay. Got that one. Okay, question about Workday. Take a quick look here. Come on, Mr. Workday. Okay, you gap back up. Had a good day on the 30th. Big gap higher. Now you're coming back again. Support comes in about 152.50. And again, some of these stocks maybe if we're going to have some bullish movement, I think it's going to be at the first of the year. I think we're in trouble here for the end of the year. But I wouldn't do anything again till the first of the year. We'll be back in a minute.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get ready to wrap up the show, we're off 72 points on the S&P cash. As I said, I wouldn't be surprised that we go at least halfway through the day tomorrow before we find some kind of buyable bounce. If you're just even looking for a intraday trade, maybe we get some today, but I think we're probably going to find at least a short-term low coming in tomorrow. Probably be in the mid 3800s for the S&P cash, and maybe that'll be the washout where we can get set up for the Fed meeting a week from tomorrow, or at least the Fed announcement. The Fed meeting, of course, starts on Tuesday next week. Options expire on that Friday, so we're going to have a lot to pack in to next week, and I think a lot of people have started to figure out that. Trying to back Powell into a corner, they don't back baby into the corner. No one puts baby in the corner, and I think he's looking at more of a long-term legacy than placating many on Wall Street or those in the political realm. So at the moment, until he changes his tune, I think you're going to have a lot of people tell everybody every time he says something, it's a lot rosier than what he actually says. And every time they bounce, they're going to sell into it. And we're going to see kind of the action we have now until we make some kind of cataclysmic low that everybody can agree on that nobody is going to sell below. Anyway, that's kind of it for the day. Don't think that there's a lot to do other than sit on my hands and remain short till we get some kind of at least short-term signal that there is some kind of bottom in. I think that's tomorrow on Delta Neutral Day. Until then, sell when you can, not when you have to. We will return like a bad rash on Wednesday.
Building wealth trading in the stock market seems impossible to most